Joining us now to discuss his outlook for the incoming administration, the Fed meeting a week away, the economy in 2025, Moody's chief economist, Mark Zandi. Mark, it's good to have you. How do you factor in the possibility of tariffs in the forecast right now?
Well, I expect them. I don't expect 10% across the board or 20% across the board, which is what President Trump talked about on the campaign trail. But I think he's, obviously all in on tariffs. So we'll get some meaningful tariffs, and quickly. You can push the tariffs through executive order. And so I expect by the spring, summer, particularly Chinese imports will face higher tariffs. Tariffs will lead to higher inflation. It's a tax on American consumers. Companies that pay the tariffs are going to pass the cost through to consumers in the form of higher prices for everything from food and furniture to cars and consumer electronics. There's going to be retaliation by some countries, so that's going to cost American jobs, and it's going to create a lot of uncertainty because, tariffs on which products, which countries, over what period of time. There'll be a lot of exemptions and a lot of uncertainty. So you add that all up, that means higher inflation and diminished growth. So that, I think, is going to be a significant weight on the economy in 2025. I don't think it's going to undermine the economy because I don't think President Trump will take it that far, but I think it's going to be a hit.
But when you talk about raising inflation, what do you say to those that say it did not do that last time in any widespread, meaningful way for American consumers? And, there's more capacity now for retailers and other companies to eat it, especially if they get the extension of lower taxes.
Well, the tariffs last time were on us. We're talking scale, different scale altogether. President Trump in his first term imposed tariffs on about $350 billion worth of imports from China. Here, I'm expecting something bigger, broader than that. At least that's what he's saying or talking about. Again, not 10% across the board, but not 350 billion. Just for context, the U.S. imports $3.5 trillion worth of goods, every year. So that gives you a sense of context. The other thing, Sarah, is the inflationary backdrop. It's hard to remember go back into his first term. The problem at that point was inflation was too low. The Fed had been working really hard to get inflation up. It was a battle to get inflation up. Now, just the opposite, right? We have an inflationary environment. The Fed's battling really hard to get inflation back in the bottle. So very different kind of inflation backdrops, between now and then. We are going to get more inflation if these tariffs go into effect in a broad-based way.
And do you think we will get a response from the Federal Reserve? Fewer cuts? Do you think the Fed's going to cut at all next year? We have two baked into the market at this point.
For sure. The Fed has to adjust its policy in the context of the fiscal policy that it's getting. That's what it does for a living. And so if you get tariffs, and by the way, deportation of immigrants, same deal. It's going to raise inflation and diminish economic growth. So those two key policies, which are going to get into place very quickly because of the executive orders, are going to work to raise inflation, diminish growth. And that puts the Federal Reserve in a very tough spot. What do? Do they respond with higher rates or less rate cutting in response to the higher inflation, or do they cut rates in response to the weaker growth? The answer is they probably won't know, so they'll sit on their hands, and I expect a lengthy period when the Fed just sits on its hand and does nothing, no further cuts in interest rates.
I just think that the retailers and the consumer companies have less room to pass on higher prices than they did in the past. They don't have the pricing power. We've seen a breaking point from the consumer.
I don't know. The consumer seems to be doing just fine. Look at consumer spending. It's rip-roaring. It's, on a real basis, 2.5%, 3%. There are, distinctions across the retail spectrum. But folks in the middle, that cater to middle-income Americans or certainly high-income Americans, I don't know. They seem to have a lot of pricing power. So I expect a lot of pass-through to those consumers.